Hello everyone, today is Friday, May 27th, 2022. My name is Evan. Welcome back to another episode of Stock Market Weekly presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves across financial markets. If you're brand new to this video series, welcome. Thanks for joining us. Thanks for being here. We break up our analysis into two parts. In part one, we're going to look through the numbers, pick apart everything that stands out, look different, interesting, or notable. And then in part two, we are going to jump into the charts. We are going to analyze price action. We're going to look at some trends and try and just focus on positioning ourselves looking ahead. So hopefully that sounds good to you. I've got some updates this week to just the whole, I guess, format of this video series. I finally had some time this week and took a good chunk of time this week, in fact, re-engineering or sort of rebuilding some of the pipeline, some of the back end that powers this video series. So all the charts, the tables, the data sources, etc. And so I've got a couple of new looks. I'm breaking things up into two waves. So there'll be some changes you'll notice this week. And then next week, we're going to have some more changes, hopefully all for the better. I want to focus a little bit more on, just really bringing the actionable insights and less time on things that maybe don't matter. We'll see how that goes. But as always, comments, feel free to leave them below. So in this episode, we're going to be looking at a handful of things here. We finally had an up week in the stock market. It was a big up week too, and we're going to talk a lot about that, of course. We also had the dollar falling to 1 month lows. We had growth in small caps leading the charge to the upside. That is what you want to see in a sort of risk-on rebound rally. We're going to talk about down streaks in the market. We've got a slide for that. And we've got some interesting things. Bollinger Bands and RSI are showing. We're going to look at that. And we're going to look at NVIDIA, which reported earnings this week and maybe led to some clues on this market rally. So let's jump into the numbers here. If we look at the right-hand column, this is the 1 week numbers. These aren't monthly returns. These are weekly returns for the S&P 500 up 6%, Nasdaq up over 7%, Russell 2000 was 6%, and world stocks about half what the United States were doing, but they've been faring a little bit better. Take a look at the 1 month numbers here. So you can see it's a more even race now between, say, the Russell 2000 at least, or the S&P and what international stocks have been doing outside of the United States. But you can see world stocks over the past month still doing better on a relative basis, at least this proxy here using the ACWX ETF. If we take a look at trends, though, we had a great week, right? So we had 6-7% huge week to the upside. But if we take a look just objectively here at the various durations here, so a short-term trend, we've got everything rising now. So the 10-period simple moving average, that's rising across the board. But if we look at the 50 SMA, we still have that declining. If we look at the 200 SMA, we still have that declining. So we essentially have these primary or this intermediate and long-term trends are still very much down in the market. So let's not lose sight of that. We can all be happy that we finally got a little bit of relief this week, but the longer-term trends very much still in the downward position. Now, if we zoom in here on volatility, you can see the VIX went out into the weekend here under 26. So we had a 3.6% drop here in the VIX volatility. Last week on Friday, we had nearly 30 VIX going into the weekend here. So this was, certainly a good thing that we continue to see the VIX deflate a little bit. This is sort of par for the course. I mean, a 6% rally, you certainly would expect some fear to come out of the market. Nonetheless, it is good to get the VIX back in the mid-20s. We can look at Nasdaq volatility here. It runs a premium, so it's north of 30. It's at 30, almost 32 going into the weekend here. It is the long weekend too. I didn't remind or make that announcement at the top of the video, but we do have markets closed on Monday, so we do have that long holiday weekend. And if we look at the Nasdaq volatility here, it's down a little over 4 points as well, trading north of 36 last week. This week, we're at about 32. So good things happening here. We're getting this rebound rally. We're seeing volatility come out of the market. These are short-term bullish things that have developed this week. Now, if we take a look here at just overall drawdowns in this market, this was a new slide here, new data set that I wanted to sort of track the drawdown this cycle. So if we look at this column here where my cursor is, the max drawdown, this is really the drawdown this cycle. So these are the peak to trough, highest price we had, which was basically end of 2021. Down to basically last week or so, and I'm using intraday numbers, but we've got the S&P 500, which made just over a 20% peak to trough decline. Nasdaq ran 31%, Russell over 30%, and then you can see again world stocks faring a little bit better in aggregate. You can see the current drawdown where we went out into the end of into this week. We have only now a 14% decline here in the S&P 500, Nasdaq 24%, Russell 23%, world stocks 16%. So you can see we're definitely off of the lows. You can see just how far though. Again, this helps sort of zoom out and take a look at the big picture of how much selling really did get racked up here in a short period, in a 4 or 5 month period. We saw some pretty steep declines, some of the biggest declines, in fact, that we've seen in many years, really going all the way back almost a decade since the financial crisis. If we look at this here, so this was a slide I posted, or chart I posted on Twitter early in the week here, and we did not end up getting this record, but what this is showing us here is a weekly chart of the Nasdaq 100, and I was tracking the number of consecutive down weeks in a row. And we ultimately closed higher this week, much higher this week, but when I took the screenshot, I think this was on Monday, we were on track for a down week. And in fact, it would have been the 8th consecutive down week in a row for the Nasdaq 100. And that would have tied the record. So this did not happen. We ended up the streak here at 7. But I figured I would throw this in here just again to give context of where this market has come from over the past 2 months. We basically had 2 months of straight down selling that would tie the record for 2008 financial crisis, and then all the way back here in 2001, the dot-com blow up. But as I say, we did get saved this week. Buyers came in, or sellers were finally exhausted, and we ended that streak at 7. But for historical comparison, I think looking at drawdowns here, looking at this slide, can give us some of that high-level perspective. Now, if we take a look at market internals here, specifically just looking at 52-week highs and lows, you can see that we did in fact start seeing the number of stocks hitting 52-week highs increase throughout the week. That's just, naturally a good thing. Lots of those stocks are, energy related and defensive tone, so it may not be the perfect ideal bucket of stocks yet, but it is still nice to see those numbers rising. Almost 300 stocks hit 52-week highs this week, and the number of stocks hitting new lows dried up this week, and we ended up getting 564. So we still had more stocks declining on the week, to negative 272, but this is much improvement over recent weeks. We want to see this trend continue here. That's the ideal bull case. We're going to continue to keep an eye on it, but that's certainly what was going on underneath the hood. If we take a look at sector performance this week, lots and lots and lots of green, everything in the green this week. Consumer discretionary was the big winner here, 9.5%. That's a massive week. That's got to be one of the biggest weeks it's had in a long time. I should run that study, but that's got to be just a monster week for it. Energy up 8.5%. Surprisingly, we have seen weeks like that, but financials are up very big this week as well, 8.26%. Technology almost 8% as well. On the downside, it was the defensive areas of the market. So healthcare, communication services, not super defensive, but still in there, and utilities up 5%. If we take a look here at Treasury yields, so this is one of the things we've been talking about quite a bit, but we did see yields top out about 2 weeks ago. So this was an early indication here. This is, I think, what effectively gave the market the ability, the equity market, the ability to put in this type of rally, is the fact that rates finally started to cool off, and they continue to cool off this week. So you can see, the 10-year, which everybody is looking at, lost about 4 bips here over week. So it did close this week around 2.74 at its 10-year yield. So you can see that is down from last week, which is around 2.78. And this here ultimately is, a good thing, right? This is where the market, I think, has been focused on, or equity markets tied to certainly what Treasury yields are doing, what the Fed is doing, what interest rate policy is looking like. And so we want to continue to see, I think, this go down. I think this would be a good tailwind for stocks, particularly growth stocks and risk appetite. Lastly here, if we take a look at the dollar and commodity performance, you can see sorted on the top performing at the top all the way down to the worst performing here. We got natural gas and crude oil at the top of the list, and they are breaking out again, 6.5% and 4.5%. We saw silver up 1.5%. We see ag doing decent. We see gold starting to perform a little bit now, and the dollar index hitting 1-month lows, down 1.38%. That's a pretty good move for the dollar. And take a look at the 1-month change now for the dollar. So you're having both of these things basically happen this week, where the dollar continues to pull back and you're seeing yields continue to pull back, and you're now getting equity markets that are finally able to breathe a little bit and put in that uptrend. Bitcoin had a pretty tough week here, is not really participating with the rally. A lot of crypto, we're seeing the pressure there late this week as stocks rally. We're not necessarily seeing that really take place in crypto. So a little bit of decoupling there, and we'll keep an eye on that as time goes on. Lastly here, our positioning with our 2 trading systems. So we have our longer term multi-week swing trading system here, Merlin. This is still, very much staying cushy on the sidelines here. The rally is nice. It's not designed to try and catch any type of bottom here. It's still just waiting. It's watching. It's monitoring. It likes the fact that the market is starting to stabilize, but it's not quite ready to start going, full into this market here. It's just going to be a little bit more patient because its time horizon is, multiple weeks to a couple of months. So it doesn't want to preemptively get in here. Our short-term swing trading system, take a look at this. It is racking up on the short side right now. It's very interesting, the types of stocks that it's selecting on the short side. It's not going after the growth names or the risk names or anything like that. This is more on the defensive side of the market that it is, starting to pile into on the short side. So it's very interesting, but you can certainly see the difference in the dynamic here, and the time horizon is very different between these 2 trading systems. So if you want to learn more about that, we've got that $1 trial available. Check it out on our website. See if they're a good fit for you. See if they can help you navigate this market. That's what they're there for, and plenty more information on our website. So with that, we'll be back here in just a second with part 2. All right, we're back here. We've got TC2000 open, and I want to start off looking at our old familiar smart trend filter. So for those of you who are not familiar with this indicator, it is our trend filter of preference. This is a custom trend filter that we've built. It basically measures price and volume in combination, and it helps sort of determine trend strength, path of least resistance. And this is available for TC2000 and TradingView if you are a user and if you do want it. I want to highlight our attention here to actually the Russell 2000, which is the bottom left. And what you're noticing here is a daily time frame on the Russell 2000. We finally got a transition up here to a green dot. That is a bullish dot that is signaling that there's strength here on the daily chart. And this is the first time that we've seen a green dot printed since April of this year, really March of this year. So it's been a long time. The Russell's been trying to trying to get back above it a couple of occasions, testing sort of the trend, but not able to get above it until now. So I think that's notable. I think that's interesting. It speaks to some of the performance that we saw out of small caps this week. So let's dive into that. Let's look at some price action here of first the S&P 500. Let's start there because that's, quite frankly, the index I think most people are paying attention to and measuring performance against. And I want to start with this view here because for a long while, for those of you who tune in week after week, thank you for that, by the way. We were looking at this 4,200 zone not too long ago, just about a month ago, and we finally broke through that multi-month support. This was a critical zone that we were paying attention to, keying off of. It goes, through this, general time here, but it's also got some influence back in the day as well. But what you're noticing now is after breaking through in the beginning of May, we are round tripping back to this area. Now we're not quite there just yet because I do, I had this as a intentional sort of crayon here, right? I don't want to get too precise, but I was calling it the 4,200 down to around 4,180 or so. So we're still about 20 to 40 handles away from, really kind of testing this overhead supply. But I think this is going to be a very interesting test that we seem to be, ready to basically battle early next week if knock on wood, all things go good for the bulls this weekend. So this, I think, is certainly very notable here from a longer term perspective. If we, really kind of switch over here and we just look at the near term price action, a couple of things that stand out to me. The first was this Friday. Last Friday when we had our market analysis video. So you can go watch on YouTube the last week's video. We talked about the fact that the market put in this hammer here. The fact that the market did not close below the Thursday the 12th, which was the prior low here. And the intraday low is really what I'm referring to. And we saw this in a number of markets, but we saw the market respect that level. We saw buyers step in underneath the 38.60 zone and drive us back up. And so Monday, when we came into this market, we did see this update in the S&P 500. We saw this, again, indecisive Tuesday, but really it was this Wednesday, Thursday, Friday combination. We did have Fed out, giving some updated guidance and some insights as to what they're thinking. We had more earnings reports that we got through as well. But really, this market launched higher on Wednesday. And when we look at the lows to where we are now, we've come pretty far, pretty quick. 9% rally from the low on Friday, where that sort of wash out, stop out, suck in some shorts and stop out some of the latest longs is really sort of what happened here on that last Friday. We are now up a very quick 9%. And again, coming back into some important areas here. So when we talk at the top of this video about the short-term trend turning up, this is not a new move at this point. So I do want to caution, let's say, traders that are looking to maybe get long now or looking to, at some of the excitement that we saw this week up 6 and 7%. I, think we could rally higher, right? We could still move back up to maybe 4,300 and test some of these other prior resistance areas, but we have seen now a 10% move to the upside. So in the context of a longer term downtrend, right, which is where we are in this market, objectively, we are seeing lower lows, lower highs, all the moving averages are declining. So the fact that we are now 7% off the lows coming back into resistance, you need to be careful here if you're coming to chase this market. It's not that I don't think we couldn't continue higher for another couple of days here. It's just that you need to be able to manage that risk if we start to roll over here. So what we could be experiencing is just another sort of quote bear market rally. Time will tell, but for now, we do need to be a little bit cautious here as the market has covered some ground. So we've got optimism that the fact that the market is stabilizing, but we need to just be careful on time frame and how we're managing that trade. And I want to go too deep into that because everybody's got a different approach watching this. There's day traders that yell at me for looking at a long-term view. We got long-term traders that yell at me for looking at too short of a term view. So you need to know your time frame, and that's very, very important. It's it's always a reoccurring reminder and theme, I think, when we do these types of analysis. If we now go to the Russell 2000, I want to point out something here on the longer term perspective. Again, just like we talked about on that S&P 500, for those of you who had been watching a few weeks ago, this was the zone we were talking about for the Russell 2000, 188 to 191. This was the level where we just basically said we want to be very cautious with the Russell 2000 breaking below this. This is where bad things happen. And if it can stay above it, then that's where, potentially it can, stabilize and some good things can happen. Well, we did break down and bad things happened. And so we continued to sell off for another, 10% or so, 11%. And now the market is stabilized. And the notable thing is, one, it is coming back into this zone again. So just like the S&P 500, we're going to be on watch. We're going to see how the market reacts around this 190 area. But the second thing to take note of here, if we dial back to the S&P 500, you can see that we did take out the prior peak here from the 17th. The Russell 2000 really started to do that on Thursday. So it had a little bit more of a leadership higher low that got put in a little more quickly. In fact, you could even see it here where this didn't quite even challenge or take out the lows from the 12th. Whereas the S&P 500 certainly did, right? We had that big hammer last week. So we had that relative outperformance here on the Russell. It was the first to sort of break out to a new short-term high. And now it is, really close to kind of testing the old breakdown levels. So Russell 2000, again, good excitement in the short term, but we are 3 days into a rally now, and we do have declining longer term trends. So keep that in mind. And last but not least, if we look at the Nasdaq 100, you can see same situation here as the S&P 500. We are almost 10% off the lows. We've got 3 strong days of buying. We're trying to take out this pivot here, and we are coming back into this band of prior breakdown. So we're going to want to see how this reacts around that 320 zone, and similar comments basically apply. One last note here, when I look at these charts, I think lots of bears. If you want to be pessimistic on this market, which I don't have any issue with, but if you want to be pessimistic on this market, you're looking at this volume and saying 10% rally, and we're coming into overhead supply, and the volume looks horrible. And there's a lot of truth to that. We are coming into, of course, a holiday weekend, so you do get volume that tends to trail off a little bit on those holiday weekends. You're getting closer to summertime trading. I don't think we're officially in the summertime trading months just yet, but there are some seasonal effects here that perhaps affect the volume levels. Regardless of where you stand on that, we are still getting price advancing here, but volume is lighter. So that is the price action analysis here for the major markets. A couple of other markets I wanted to talk about was IEF. So this is basically the 10-year Treasury bond fund. So this is inverse to interest rates and to the yields that we looked at earlier in the video. But basically here, as we talked about, you can see that we are stabilizing. We are inching our way higher. This looks like a little bit of a dangerous inch higher. This could be a wedge, a bear flag that could be developing in the context of the primary trend, which is lower. If we start to break down in treasuries, then, or I'm sorry, in the, depending on what you want to look at, but if we start breaking down in treasuries, then this could spill over to the equity market. So keep this as an early indication here. If we start to break down from this flag, this wedge, whatever you want to call it, then we do want to be maybe a little bit more cautious on that rally. You could look at the TLT as well. You have pretty much similar things developing here, but nonetheless, we are off the lows, and that is, again, glass half full, that we are not making, and yields are not just ripping back up to the upside. A couple of other markets I want to talk about was the dollar. So UUP here is the ETF that we're looking at in TC2000. You can see the dollar had been in this very strong uptrend, putting lots of pressure on really lots of things. And we saw the break of that trend. There's lots of ways you could define trend or draw the trend, but we broke down from it. We're now at 1 month lows. I wouldn't be surprised to see a bid get caught here pretty soon. I don't know if the dollar is quite done just yet, but certainly on the weekly chart, this is breaking down on some heavier volume, and we want to see if this can, stabilize a little bit, and where the bulls step back in. Those could also give you some early indications as to what the equity markets might do. Last but not least is oil. We can see here, this has been in a range. This has been consolidating. It's not quite taken out the intraday high here, at least in the USO terms, but it is closing at new highs, or maybe it just got really close to it. Either way, starting to resolve higher, volumes drying up, but it is starting to march its way higher. So certainly USO trend back intact. Now, last couple of things I want to run through this week. First is just the industries that we usually look at here. So every week we scan some of the notable sectors and industries that are working. This week, we had kind of a diverse mix. We had a lot on the energy side, but we saw airports and air services also putting in a heavy volume move to the upside here. Early part of the move, so this is kind of an early push higher here that could turn into something interesting. Apparel stores, I want to look at a few stocks in just a moment. Apparel really putting in, and just retail in general, putting in a big move to the upside. We see chemicals. Take a look at this beautiful base and potential breakout here. We had heavy volume come in last week. We see continuation this week. This looks good as a sector here as it consolidated at highs. Department stores, discount stores, again, that retail, which we're going to talk about. Internet content putting in a big hammer here. And then we just got a bunch of oil and gas that's breaking out. We can see chemicals as well, tobacco, tools and accessories. I don't forget what this was. I think this, I was clueless when this happened the other week as well. And utilities also working. Let's take a look at a couple of stocks to round this out. I know this video is getting a little bit long here. NVIDIA, I thought this was an interesting one. I tweeted this, and a lot of traders were really, pointing this out as well. They reported earnings on, well, it was Wednesday. I think it was Wednesday after the close. So Thursday was the first session of trading after the report came out. But basically, they beat on the current quarter, but they guided down into the future a little bit. So their forward guidance, they had a little bit of a guide down. And in this type of market environment, we've seen just time after time stocks getting absolutely obliterated or punished, even for small misses, small guide downs. And we saw the guide down, but we actually saw the market respond positively here. We got at least this initial reaction. Now, of course, in the full picture, this thing is still down 45% from highs. But in the near term, the fact that we got a little bit of a guide down and we saw positive reaction gives the market maybe the check mark that it can rally here, or that we sold off enough that this is sort of priced in, or that buyers are still willing to kind of come in and support prices at these levels despite a small guide down. So that I thought was very interesting, and certainly helped spark or give some confidence as well to some of the other things that we're seeing out there to this rally into the weekend. Last but not least, we sort of talked about it on the sectors and industries. But if we take a look at like Ross Stores, for instance, this thing was up 21%. Last week, let's just remember, it was down 21%. But the fact that it recovered almost all of it, notable, interesting. Walmart certainly was down huge last week, 20%. We talked about that. Rebounded pretty strongly here, 8% move. Same thing if you look at like a Dollar General, up 22% this week. It was down 19% last week. So lots of big moves in the retail space, in the consumer defensive space, staples, and so on. So that really, I think, covers everything. This definitely went longer than I thought it would, but we did cover a lot more new information here. So let me know your thoughts. Did you like the new, sort of format and some of the new slides and information that we looked at? Let me know your thoughts and what you're looking at this weekend. Always curious about what has your attention. So that's it for me. If you like the video, please do subscribe, share it out if you think it could benefit some other friends and traders that you know. And as always, I want to wish you happy long holiday here and time away from the screens. And we'll catch you back here next week. Thanks so much.